only three reasons why PayPal is seeing a surge in price, at least a pullback. The first one, it is coming off a monthly buyer's level, potential double bottom. Now, the reason why price closed below was because previously price came all the way down to the lower end of the zone before pulling back, and when it returned, there were no more unfilled orders. We can see this a bit better on the monthly chart. The zone was formed. You have a rallying price, a basing candle rally out, right? So that's the first reason. Number two, from a technical standpoint, it's at an accumulation area, right? This was the distribution area at $300. Now you're at an accumulation period where buyers are accumulating their shares, right? And the third reason, it is very, very cheap from an evaluation standpoint. So one of the central premises of being a true value investor is the willingness to go against the popular opinion, no matter how sound and justifiable this one may be. Today, those who call themselves value investors are being tested. PayPal is proving to be a name ripe for acquisition. Bears argue that the competition against industrial giants like Capital One and Discover is eating away at PayPal's potential. Still, markets have a different opinion on the matter. Noise aside, analysts are clear on where PayPal should be trading. Time for investors to update their buy list. According to sources, PayPal owns over half of the online payment processing platform market today. This dynamic begins to create a proverbial moat that all investors look for, as it is one of the main commandments preached by Warren Buffett when finding a solid business. In the United States alone, 56% of citizens are reported to have a PayPal account and use it often. Other lesser statistics remain to expand PayPal's dominance over 200 different countries. If size mattered, PayPal would be set to shine. However, size is nothing without growth. PayPal is growing at a faster clip than anyone had thought in the last quarter alone. The company reported a massive 24% jump in earnings per share. Now, Microsoft has also used PayPal payment services for the past 16 years. In a recent press release, Microsoft's Senior Vice President stated, "We are thrilled to expand our partnership with Microsoft to offer them access to our full suite of capabilities that will create a beautiful customer experience across the entire shipping journey." All right, gets better. PayPal analyst ratings have landed on a consensus price target of $92 a share, implying a needed 50% jump in the coming months to close this valuation gap. These trends have pushed analysts to this bullishness, though growth remains the common thread. EPS is expected to jump by as much as 17% for the next 12 months. Again, this is one business showing double-digit jumps across all its drivers, yet the stock refuses to give shareholders a break. Management expects a total of $5 billion to be allocated toward repurchasing shares. 22 million have been repurchased during the past 3 months alone. This can be taken as a powerful message from insiders, implying that the stock is undervalued and will soon be set for an overdue rally. All right, so before we continue with the analysis, here's some other points in terms of being undervalued. So PayPal's price to earnings right now is 11.2 times. The 8-year average is 32.1 times. PayPal's enterprise value versus EBITDA is 8.5 times. The year average is 21.6 times. All right, here's another one for you. PayPal's price to sales is 2.1 times. 8-year average is 6 times. Okay, here's another one. PayPal's price to free cash flow is 17.8 times. The 8-year average is 35.4 times. So it is massively cheap. All right, so if you agree, where can you jump in? All right, here's what I'd like to see. This was the last level where you had some sellers, right? Let's do this so you can see this. I'll call this a flip zone where you had buyers, and when price came back to this level, the sellers were in control. As you can see, price declined. Now what we need to see in order for the buyers to be in control, we need to see price move higher from this current level. So here's the setup. Again, I have a first target at $76. That's where the origin of the leg down occurred. Um, you get this formation and it's smooth sailing once price closes above 66.70, as that's a gap which occurred on the previous earnings. So let's see what happens over the next couple of weeks. But PayPal is definitely cheap. Thanks for watching. Subscribe, please like the video.